Hello and good day to all friends. This is Mojtaba Rasti. I'm here from the Thales team, and today is October 25th, 2025. With a Bitcoin analysis using the Thales Market Screener tool. Please note that these analyses are for educational and informational purposes only. If you use this information to take positions in the market, the responsibility for any profits or losses will be entirely your own. So, the downward move we were expecting happened. In fact, as you can see, the drop started with this red candle, and we went down to 109,700. The price found support again and moved upward, but pay close attention, this upward move. Now, especially right now on the 4-hour time frame, if you look, this move hasn't been supported by volume. I mean, not just from this candle, even if we go further back, for example, even from here, if you consider this upward move. No high volume support. Weak move. On 1-hour chart. And take a look at it on the 1-hour time frame as well. First of all, on the 1-hour chart, you can also see divergence. For example, right here, this move is relatively bullish. But you can see that the move on the RSI doesn't look the same. The highs are almost decreasing, and again, you can see here that during the price increases, you don't get much volume, whereas here, in these areas. But during the drops, why? Down here, at the lower price levels, we did get some volume. So, this bullish move that happened here after this red candle wasn't supported by volume. And it doesn't seem like it's a strong, fundamental move. Right now, you can also see that the last two 4-hour candles are pin bars. Both the previous 4-hour candle and this current 4-hour candle, which is about to close, have turned out like this. Basically, this has become a pin bar, and here we've almost seen a double top. That is, our previous high was 112,097, and here we went up to almost 112,000. We're basically seeing a double top here. If it gets rejected, well, it could come down. At that point, this bearish scenario could continue and actually play out. You can see it in the lower time frame. For example, on the 1-hour chart, the RSI also broke through the moving average. So, we've come down here below the moving average and this small bullish trend. What will happen next? Let's go to the market screener and let's see how many trades we've had for tomorrow's expiration from the start of today until now, and what's the situation like? For October 26th, it's not that much. Tomorrow is a holiday, so naturally, there are 1,050 bitcoins traded in the form of 1,120 contracts. The options and their chart look like this, which at first glance is bullish, matching the current bullish leg we're in. But if we zoom in, actually, we should look at this chart like this. That means here, we have the possibility of movement in both directions. You see, if we turn on the delta, you'll notice both sides are possible. The price is standing in the middle. It could go up toward 118 and 113, or it could go down to 109. So, the possibility of movement in both directions is seen here, and if we take a look at the processed database, we also don't have any significant negative open interest. Therefore, there's no need for a filtering tool. Open interest filter. This might give us a more accurate perspective here. There's a volatile situation going on. There's a setup here similar to a short strangle, where the ceiling is at 112 and the floor could be lower. It could even be at 100 or 100,000, but if we look more closely, we can also consider a floor here. Here, where the red area has gone into loss, it means from 110 109, roughly from 109 down to 100. And at 110, if you look at the delta situation, we're moving upward. With the price increasing, we see a decrease in delta, which indicates call selling, meaning we're at a price ceiling, from 114,000 down to 110,000. We have put selling, meaning down to 110,000, so this also has a pullback. The stronger momentum is coming downward, down to 110,000. Up to here, this is one stage. They hit this area, meaning from this reversal, from the point where the price bounced back. Traders are expecting support at one stage, and there's a bottom that could provide support in this 110,000 area. If it breaks here, you'll see that put buying gets triggered here. From 110,000, we have put buying again down to 105,000, the well-known 105, and once again, 105 is seen as the bottom, and again, 105. That's the point below which put options have been sold, delta is increasing, and the bottom has been identified. So, given the technical situation we're seeing, we can still consider a higher probability for a move to the downside. Alright, let's move on to drawing the indicator and the zones and continue. So, you can see the intersection of the buyer and seller chart. At the top, our agreement, let me say, our agreement at the top is around 112,500, and at the bottom, the agreement is at 110,300. Our upper agreement is actually not very noticeable. It's a very small profit, and in my opinion, it's already been seen. Look, 112,500. How far did we go? We went up to about 112,000. So, you could say, considering the time we're doing this analysis, it seems like this part has already been realized. We actually went close to it and then came back. The zone that has formed at the top is a heavy zone, which is the area of agreement. That means the seller doesn't want anything above 112,500, and the buyer doesn't want anything above 112,400. So, this zone that's formed here is an area where buyers and sellers agree, but there's no agreement on the lower zone. The seller sees 110,000 as the floor for tomorrow. Alright, let's enter the points and continue. Alright, so these are our indicator bands. What's clear is that the floor and ceiling are getting closer to each other. Just look. Compared to yesterday, the ceiling has moved down and the floor has moved up. What's obvious here is actually a decrease in volatility. So, there are two zones. Usually, Sundays are like this. The two zones have come closer together, the expected volatility has decreased, the volatility for tomorrow is expected to be lower, and the bands have compressed together. Overall, the trend is still bullish. If you look closely, both the upper and lower bands have been trending upward compared to previous days. Here, we had a reversal and the trend turned bullish, but even within this bullish trend, there are ups and downs, and you can see here that the volatility range has decreased. Let's go and update the zones and continue. Well, as you can see, just like we talked about, look at how close the zones have gotten to each other. Has the range of this fluctuation for tomorrow decreased? Our upper zone is a wider zone. Although here it seemed like the lower zone was wider, but let me check the zones one more time. Okay, now it's correct. The upper zone is actually narrower, and you can see it's really thin. From about 112.430 to 112.590 is a zone that's slightly in profit and is a point of agreement. So, still, take a look. In my opinion, the path has mostly been cleared out, but we still have liquidity here, so the price might come down. And it might make a shadow and take out this liquidity, but it seems like the price movement's momentum is turning back downward. If it comes down toward the lower zone, well, the lower zone is roughly from 110 to about 110.380, and the middle zone is also there. The maximum profit and loss, which is 111,000, is still in the same place we marked it yesterday. And you can see that the volatility range for tomorrow has also decreased. Let's take a look at delta and gamma. We have a heavy gamma on the upside, right near where the price currently is. There's a short gamma for the ticker. Actually, the ticker here has sold a call. They've sold the 111,800 call, which makes the gamma long. Look at 111,800. Right here, where the price reacted, it's really interesting. Look, this is exactly where the price reacted. The gamma is long here. If the ticker is the call seller, then the maker is the call buyer. In other words, here the market maker is the buyer. So here, the buyer is the call buyer, and if they're present in the market. Assuming that the call buyer has a positive delta, so when the price reaches this level, the market maker, to neutralize themselves, they start selling. By selling the underlying asset, they hedge their positive delta, and that's basically what happens here. You can see its effect as the price hit this resistance level right here. We have a long gamma on the downside at 108,600, which is basically a long gamma resulting from the purchase of a put by the ticker. That is, we have a short gamma for the market maker at 108,600, a short gamma for the market maker at 108,600. Look here. A short gamma. We have a short gamma for the market maker, which basically means a put has been sold here. So if the counterparty, which is the taker, is the buyer of the put, then the put has been sold, and selling a put has a positive delta. As a result, if the price also moves this way and reaches here, the market maker, to neutralize their positive delta, they start selling. Now, if the price comes here, what happens? We pretty much said that this structure is starting to look like a head and shoulders pattern, shoulder, head, second shoulder. If it comes here, what does it become? Right, it forms. This structure might be completed, and at that point, intensified selling and a move further downward will likely occur. So, that's how the scenario is built, and we also have a gamma down here, which is at 99,000. Basically, the gamma short is here. The put seller has seen the bottom and it's really low now. For now, we're not dealing with this, but remember, on the day it hits 100,000. Actually, we have another gamma long here for the maker, a gamma long for the maker that will act as support. But for now, it's outside the scope of our analysis for tomorrow. Alright, that's it for the gammas we have. Let's move on to other expiries and take a look at the other expiration dates. So, if we look at the October 27th expiry, let's activate Monday, October 27th. The trades that were done today for October 27th, look, this is interesting. Right now, we're moving downward. Along with the price drop, we're seeing a decrease in delta up to here, up to 110,500. There's a floor at 110. Below 110, actually, the floor is at 105. We expect support, but if it breaks, puts trigger down to 100,000. This continues. If price rises, delta increases up to 114,000. Just keep in mind that the trading volume, the trades that were done today for actually, the 27th base, at least in the processed database, is very low. We're in the processed database. Davis and Shasa, 8 bitcoins, which is low. If we look at the raw database, you'll see it's still not that much. For base 27 in October, 414 bitcoins have been seen on both sides, with a bias toward the downside. That means our downward leg, as you can see, is stronger. For the 27th, the bearish outlook is more intense. By the end of trading, the probability for both sides has gotten closer, but the trading volume is very low. If we look at all the trades, you'll see the bearish dominance for the 27th is evident. And October 28th. Again, the volume is very low. 231 Bitcoin for October 29th is very low. It's just hedging, and October 31st is where the real action is. Today's trades for the end of October are at 1,450. It's Bitcoin, as you can see, the situation is really volatile. So right now, we're at a point where we could go up to 116, up to the Delta peak, or get support on the downside. With the decrease in Delta, the price is also facing a decrease in Delta, down to 105. The 105 bottom has been seen for Friday, for October 31st, and actually the 116 to 117 ceiling has been observed. And, given the pattern, these candlestick patterns we're seeing here, it's likely that we could head more towards 105. Let's see the possibilities if we move the slider forward. Let's hope for a swinging game. It can be seen. Ridiculous and a waste of money for the price seen during the day, actually. B. Is. Let's see the Friday trades from yesterday's 24th to now for October 31st. At that point, you'll see that the story gets interesting. A floor has been seen. Look, 22,895 Bitcoin, and for Friday, our entire curve looks like a put sale. A floor has been seen at 105. Basically, from right where we are, we're moving downward. For this floor to be realized, it starts from here, from 113, then in the middle it's 106, 107, and it goes down to 100,000. Somewhere in this price range, the price will find its floor. It seems that by the end of October, things will be settled. We'll see a price floor and get ready. Probably to take off toward, in fact, above this. Above this wedge that we had drawn on the weekly chart. Alright, that's from a longer-term perspective. Let's go back to the 26th expiration tomorrow and let's also consider the start of trading. Starting from today, and this was our chart. Let's look at the details of the trades. 1,059 Bitcoin, and see how it is, 612 Bitcoin. In fact, we have buys, 332 Bitcoin call buys, 280 Bitcoin put buys. The call buys are higher. What was their target? The target for our call buys was above 111,600, which has been achieved. Here, on this shadow, we went up to 112. So, it was achieved. Most likely, the puts remain, 280 puts. Where are they targeting? Below 172. Right now, we're heading toward this lower zone of ours. We're moving toward this zone. Our lower zone and sellers, we have 447 Bitcoin in sales, with 158 Bitcoin call sales and 289 Bitcoin put sales. Here, the put sales show dominance. Our call sales, the ceiling is at 119. We saw that this was also realized. We can be sure of it because we've reached it. Now, put sales are happening. It's being realized below 110,700, lower than 110,700. Actually, you could say it doesn't want to, if I turn on the gamma to show us the average. 110,600 is the floor, and now the put sales are waiting for it to be realized, and they're hovering right here near this lower zone. So again, the situation in the coming hour will probably favor a move downward. Alright. Let's go to the processed database. N. That's that, nothing special about it. For now, we're processed. We don't have a strategy, like, we don't have block trades, the trades are really small. Let me increase the size. 10 Bitcoin, there are 14 trades of 10 Bitcoin each. As you can see, these are 10 Bitcoin trades. There are also some bullish pairs with 10 Bitcoin. They're aiming for profits above 113,000, as I said. Given the current conditions we're seeing now, in terms of technicals, RSI, and the state of the candles, it seems like this bullish move was just that, and it's already played out. And you can see the big trades here as well. There's a 21 Bitcoin trade, which is a short put at 109,000, so you see, they've set the floor at 109,000. For tomorrow, there are two 25 Bitcoin long calls at 130,000. Base trade, 20 Bitcoin, short call at 113, ceiling set. And here again, it says 19 Bitcoin and another 19 Bitcoin short. There's a put at 100,000, meaning they've basically set the floor at 100,000, so we can see that there's also a serious outlook toward the downside. If we move the expiration date, move it forward to the 27th. The trades that came in today for the 27th, again, well, we don't really get much out of this here. Of course, you can see that for the pair. Most of them are bearish, meaning 10 Bitcoin and up for the 27th are mostly bearish. And let's check the 31st as well. The 31st's database has been processed. And I'm making the open interest positive. There's actually no strategy here. We just have 3 block trades, and if we look at these 3 block trades, you'll see all 3 are puts. 2 of them are long puts, which means they're put bets. If we turn all 3 on together, yes, they're bearish. Look, this is a put bet. 12,000 means a floor at 102, actually 25 Bitcoin with a target of 108,000 is a long put. They bought puts, which again shows a bearish outlook. The overall view is also for the 10 Bitcoins. There's a possibility of movement in both directions, but it's leaning a bit toward the upside. So, let's take a closer look at the 24-hour liquidation map over the past 24 hours. You can see that there's liquidity on both sides of the price, to some extent. It seems like there's more liquidity on the downside, but honestly, it's a bit hard to tell them apart. The two sides look pretty similar. The distance between the price and these liquidity levels is also very similar. They're about the same. Let's take a look at the 48-hour chart. Over 48 hours, you can see there's a bit more liquidity clustered around 112,200, right here. We moved up close to it and collected some liquidity, but the area itself hasn't had its liquidity taken out yet. It's come downwards. And let's take a quick look at the order book. Again, take a look. We have liquidity here at 112,200, and of course, on the downside, there's also some starting from 105,000. Take a look. From 105,000 up to 110,000, there's a lot of liquidity stacked up. So, if we want to look at the overall situation together, it still seems like this arrow, the one we drew, we can go ahead and put it right here, this one. In fact, it could be correct. That should be our higher probability expectation for the coming days. For now, we're setting this at our support area, around 110,400 for tomorrow, and there's a chance we could go even lower. By the end of October, we might even see 105, and then the move upward will probably start. But considering the liquidity we have here around 112,000, it's not far-fetched to think we might see another liquidity grab toward 112,000. Although, look, here we went up to 112,100 and what about here? No, we came down to 112,000, so there's still room. The price might play another game, another liquidity grab. It might grab liquidity up to 112,200 and then actually continue its move downward. Thank you for your attention. I hope this has been helpful.